Professor, it's good to talk to you. The overarching idea is that they won't be lifting output in February, but that now compliance will be an issue. How do you look at it?
Yeah, it's a really volatile day. We started out today with a big, rise in the oil price. That those rises were already erased by early morning, and still with more decisions actually coming out of OPEC today, and we'll have more volatility throughout the day. So a lot to watch on oil. It seems that now that OPEC has moved to monthly meetings, it can really help it to fine tune the oil market. So it's not so quick to make very big decisions. They can always move to the next month. So that's why we're really seeing this cliffhanger throughout the day.
Which is having a bigger effect on the oil market, or the oil price more specifically right now? What's happening with the dollar, which has been going down but has bounced mid-morning, or what is happening with OPEC?
Right. So on the demand side, there's a lot of factors that should keep oil up and keep oil going up. Whether, as you pointed out, the weak dollar, demand for diesel is up to pre-lockdown rates. Commodities in general are soaring. There's a lot more money out there. There's paper trades. Traffic is up in most places. Back up to pre-COVID levels. Well, flying is only 50% of last year. It's still the highest it's been, since the lockdown. So all on the demand side, the trends look really good. But there's a couple, the big question is, and this is, less about oil and more about viruses, is the new strain, will the vaccine take care of that too? And the economic trend that's going, the mobility trend that's happening, will that continue? Or will this be, sort of new lockdowns and a new reality? So I think that mix is why you see such a volatile day today, and that will continue this week.
So that's really the demand side. I just want to hit on the supply side for a moment, because there were a lot of headlines over the weekend concerning Iran that should have really moved the oil market. For example, the IAEA reporting that Iran is intending to begin enriching up to 20% at some underground facility. Lots of talks about maneuvers between the U.S. and Iran before Biden takes the helm of the presidency January 20th. What are you hearing on this? And when does the market need to care?
Yeah, so I think, Alex, we will already see with the South Korean tanker being captured by the RGC, by the Iranian Revolutionary Guards. We'll already see some reflection today and tomorrow to that, and the IEA report on enrichment. And in a way, the market is already built in sort of a Biden administration release of some Iranian oil, or maybe some watering down of the sanctions early on in his administration in order to entice Iran back into the Iran deal, to the JCPOA. And maybe these elements are actually going to delay that. So I think there will have to be some rethinking if that's already reflected in the current price.
Brenda, how would OPEC react if Iran was able to put barrels back into the market?
Yeah, I think that, again, they probably have already factored in that could happen, in the early part of the Biden administration. So I think to a certain extent, since the election, that's already part of their policies, and it's probably part of, why Saudi Arabia, in contrast to Russia, is hesitant to bring more production onto the market, because they already see the possibility of Iranian oil in a certain extent returning. We're also seeing Libyan production up. So within OPEC, there are already some production changes.
And we've seen some of this dynamic play out, like in the Brent curve, and is in shallow contango. Dubai backwardation has more than halved over the last few weeks. So I guess then my question is China going to buy at the same pace that they did in the third quarter and beginning of the fourth quarter of last year? On a demand sense, if they don't buy it, I just don't see how OPEC is going to be able to raise production at all.
Right. Well, there's two really, really big post-COVID lockdown trends that will affect the demand side of oil, including from China. So one is that we're not going back to public transportation. So that there's a lingering fear of public transportation. So even once people are going back to work, they're buying used cars. The rates of used car purchases are up. They're using ride sharing, but they're not going back to public transportation. So that will keep oil up. Another side is plastics. All of us can see it in our lifetime. It was already our lifestyle. It was already built into the oil price that demand for plastics before COVID would be going down. But we're seeing that not only is it not going to go down, it's actually going to go up. And again, with disposables, medical equipment, that's going to stay up for a long time. So those are two sort of permanent or
Yep.
at least for the next couple of years, demand elements.